Hello and welcome to my usual weekly review. I delayed it past Sunday and today is Monday morning, waiting to see if the deal gets signed. Well, the deal did not get signed, but Mr. Trump's put out a tweet saying that it's all done and dusted, and this Friday he's expecting the deal to be signed, the Hormuz Strait blockade to be removed, and Iran agreeing not to do any more nuclear weaponry, at least from that point of view. And Iran this time hasn't yet strongly objected. Before Sunday, they were still saying, we are not sure about the deal. They haven't strongly objected yet. So this time it looks like it's for real. And what are the things that can still be a thing? Israel, Lebanon. Of course, Israel and Lebanon have to join this in some way. And second is that will Iran make that a deal breaker? Or will Iran say, okay, we go in for a 60-day ceasefire, but in that time we expect Lebanon to be resolved? Whatever it is, the Brent crude is reflecting. That's the main harbinger of the geopolitical crisis. It's eased to $83 as I speak. So to that extent, it's a very good news. And if you look at it now from the perspective of the geopolitical premium, right, that should definitely come down on the Indian markets especially, right? Now, are there any other things which in the geopolitical front or world front which are going to affect? Yes. This week, 16, 17, is the Fed's first meeting under the new governor, Mr. Walsh. And market is eagerly looking forward. If you recollect, the news around the inflation, around the strong labor market had all factored in rate hikes towards the end of the year to a certain portion. But now with Mr. Trump formally saying, and by Friday if you're expecting, depending on how Mr. Walsh and the Board of Governors looks at this, they could look at this inflation as transitory. And if they come out with a dovish, not a rate cut yet, but a dovish outlook, that itself is a huge positive for the risk-on sentiment, which should help both the US equity markets and emerging markets and filter down to India too. So let's fingers crossed for that. Second, of course, as I said, Israel's tweets and whatever Mr. Netanyahu says is also important for this week. But from India's perspective, right, 3-4 very important things. First of all is that there's a huge geopolitical risk premium on the Indian market that should reduce. FIIs seem to have got a hint of that this time the deal is closer to doing, because from after Monday, Tuesday, Wednesday, Thursday, Friday, Wednesday and Thursday was just 2,000 crores of selling. Friday was 1,000 crores only of selling. So is that tapering down? Is the shorting by the hedge funds coming down, right, because of this risk? Because if you see this now, if the war is going to end, I saw a report by Fitch says that it could expect oil to be $80 by August and maybe heading to 70 by September, near term, right? I know there are still supply related issues and things to come back, so oil going back much below that. But even 70 was not expected, but now Fitch is saying that. So if that's going to be the read of the markets, then definitely one thing you can expect is shorting by FIs will come down, because in a time when oil is easing, the fiscal concerns will ease. And that's the next important thing that I want to talk about, is that if it's just a 3-4 month, April to let's say July, right, period that the oil prices were high and the government has to absorb it, that can be done by cutting some expenditure a little here, some little bit twinkling on the taxes, but the fisc should be protected. And that's a huge risk related matter for India, which again matters to FIIs. So I think that's a big relief for this market if really the deal gets signed on Friday. And of course, the fact of the matter is domestic money, right, is ready and waiting. Though we saw mutual fund inflows come down from 40,000 to 22,000, the fact of the matter is that DIs are still in a deployment mode. Even on Friday, they did deploy about almost 5,000 crores, I think. So to that extent, the market will get support, but you might see a lot of sectoral action this week because of the easing oil prices and the impact. And if any FI flows are going to come, it's going to be positive for the banking sector because it's a huge part of the index, right? So very interesting week, but a very positive outlook after many weeks. So let's hope that all that we pray for comes through, which is the deal signing on the 19th, a dovish Fed on the 16th, 17th, and the market should finally grab the bull by its horns, pun intended, and take us to higher levels. Fingers crossed. Look forward.